We're back, everyone. It's pulling back the curtain, and today something that is top of mind for almost everyone. I don't care if you're buying or selling right now, or you're just listening to the news. You want to know from an expert, and we have here Damian Cook with Assurance Financial, our trusted mortgage lender. You want to know what's happening in the market, what are the competitive edge clients doing right now that are winning these bids, and we're going to jump in with Damian, and Lauren's going to start us off with some of our favorite questions.
Yes, thank you, Damian. So in today's competitive market, we are seeing buyers having to really pull out all the stops to get their offer selected or considered by the seller. What preparation steps can our buyers take before they actually start viewing homes to ensure that their financing terms can be competitive?
Yeah, awesome question, super relevant. And thank you so much for having me on today. This market is unlike any market that I've been a part of in the past 16 years. I've been doing mortgage lending here in North Atlanta. And I think now it is absolutely, and I can't stress this enough, more critical than ever for potential home buyers to have their financing planned out, set up, ready to go. In years past, a lot of times clients would go out and find a home first, then call us and go through the lending process at that point. Hey, I found this home. I want to buy this. What needs to happen? Which is, in a normal market, as long as you're qualified, works okay. It's not what I suggest. My suggestion is always, if you're going to buy in the next 90 days to 6 months, to go ahead and get a pre-qualification. But what makes this market so unique is when they're going in, and I'm sure y'all are feeling it with all your clients, in a normal market, they might be one of one or one of two offers. Right now, they could be one of 16, 17 offers. So one, if they're not pre-qualified, unless they're paying exponentially more for the house than everyone else, their offer immediately is going in the trash. So that strategy definitely is not working right now. What we're seeing and what we're advising clients to do is not just get pre-qualified, but go ahead and get fully pre-approved. And depending on the strategy that the realtor wants to use, we're seeing a lot of either reduced financing contingencies or a lot of times no financing contingencies in order to get your offer to rise to the top and beat out the other 16, 17 offers that could be on the house.
Yeah, I actually have loved this shift. I think that it creates a very prepared marketplace. I think that it's like, unless you're intentional about wanting to go out and find these houses, there's really no point in wasting your time with this whole process because it's very honestly cutthroat at this point. And so I think this has been really great because it also helps enable our buyers with information, from you. You can say, hey, I'm looking at your financial picture right now and what I can qualify you for. And if you do X, Y, Z, we can actually get you, in this price bracket, right? So it's more of a coaching up front so that people are very prepared. So
I agree with you 100%, Meg. There's when you start the lending process ahead of time, a good lender, that does gives us an opportunity to review credit. And like you said, it's not just moving someone from bad credit to qualifying credit, but a lot of times it's moving a client from good to great.
Right.
Here's a couple things we can do. The thing about credit reports is it's usually, sometimes it can be a relatively quick fix. Sometimes it's not. But even on the quick fixes, we have to have 2-3 weeks to do what's called a rapid rescore to let it filter through the repositories to be reflected on the credit score. So that takes some time. But I agree with you. The other thing that I love the most is, as opposed to someone calling me and say, hey, I found the house, can we make the loan work? Doing this ahead of time, we're going out and giving the clients accurate information. And, just being a lender, I always recommend, hey, let's go out and match the house with your budget, not try and match the budget with your house, because that's where people end up in bad financial situations, house poor, right? if we have a target payment up front that the client wants to hit, then they can bring that information to y'all. Hey, I need to be in this price range. And it allows you all to show them homes that meet their budget. We know that they can qualify for, and it's going to be comfortable long term, right? That's the other thing I love about this market right now.
I agree.
Absolutely. So another term that is important to sellers besides financing contingency or lack of financing contingency is often down payment percentages. So if a buyer's not a cash buyer, and we're looking at putting 5% down versus 20% down, the 20% down buyer could be viewed as stronger. So a lot of our millennial buyers are using gift funds for their down payments. Can you explain how that works?
Yeah.
Who's eligible to use gift funds?
Yes, great question. So yeah, we are seeing a ton more gifts coming in and larger down payments. Once again, the name of the game is to win in these super competitive offers, right? So when you're talking about gifts, and it goes back to, it kind of parlays into that last question we just talked about. When you do it up front and talk with your lender up front, if we set up the gift ahead of time, it is very easy to do, okay? When you're calling us after the fact, hey, we're under contract, we need to close in 30 days. Oh, and I'm getting a gift from my great Aunt Mary. Sometimes it's going to work, sometimes it's not, right? So the short answer, there's a lot of nuances. The government and the regulators are very tight on gift underwriting because that's where a ton of fraud comes into the mortgage process. So it is very black and white, very stringent. There is no gray area. So we got to set it up properly. But the short answer, without going way into it, is you can get a gift from a blood relative, is always a slam dunk. A long-term, like friend of family that we can document, which gets a little bit harder, can be used also. And then also, obviously, a domestic partner with proper documentation can be done as well. But those are the three kind of slam dunk gift donors. When we get outside of that, it starts to get very, very, very tricky. But that's one of those things, hey, you talk to us up front. Yeah, your great Aunt Mary, no problem. We get them a gift letter. They fill it out, sign it. And then depending on the type of loan program, requires certain documentation, potentially from the donor. But once again, if we're doing that up front and the donor knows, hey, we do need asset statements or no, we don't, they're going to be a lot more prepared and willing to cooperate.
That makes sense. I think that's really important too before people start getting into this. And it creates a lot of anxiety, as if there's not enough stress.
Right.
Right. And then you throw in, oh, wait, I've got to pull money from this source or that. And then it just creates more anxiety in the process. And we go back to that preparedness and creating a more streamlined approach.
Yeah, and the last thing I want to say about gifts, what I've seen is, family members might be very willing to give a gift, but when they get into the process with us, and a lot of times, hey, depending on, once again, it's super regulated. So depending on the program, Aunt Mary, we need A, B, and C for you. A lot of times that changes the whole dynamic, right? They might be willing to give the gift, but not willing to give the documentation that's required. And we have some methods, talking them through that, getting them more comfortable. But once again, if that's going to be a major roadblock, we're better to know that 3-4 months out. And then there's other things we can do to get around it, as opposed to, hey, we got to close in 30 days. And there's no way Aunt Mary's giving you bank statements. Absolutely not. And the whole thing starts to go up in flames.
Yep.
I've had a couple of those situations with you, Damian, and my clients.
One I can remember pretty vividly.
Yes.
I think I can remember it vividly too. So
okay. Oh, go ahead.
I think that it just kind of segues into the next question, and kind of obviously, like, Damian, your track record. Tell everyone how long you've been in the industry, so they can understand your tenure here.
Sure. Yeah, I've been actively originating for 16 years, and then I've been a producing branch manager for a little over 9 with Assurance Financial.
Okay. Great. So then that's
And he lives in Dunwoody.
What was that, Lauren? I'm sorry.
He lives in Dunwoody, so he's local to us
Yeah,
outside the perimeter.
Yeah, I grew up in Roswell. I've lived here pretty much my entire life, with the exception of undergraduate school. And love the area. And the other thing, kind of where I think some of the value that we bring to the table for our clients is not only growing up here and knowing the area, I can speak a little bit more intelligently about the areas they're looking in, but also we bring the relationships with all the local attorneys, the appraisers. We have a deep network here in Atlanta, and 98% of my clients are in Atlanta, right? So it's more of the mindset of, hey, I could get a license in North Dakota and do loans up there also, but why bother? I love working in Atlanta. I love putting people in homes in the communities that I know, right? And, that's where I think that, what I tell people all the time, whether you want to work with me or someone else, you definitely want to work with a local lender, someone that knows the market and is invested in the community. And you're just going to have a much better experience going through the process with that lender.
Can you touch on your appraiser panel? Because I know
let's talk about that.
Don't think about that when they're a lender, but it becomes potentially an issue if there's an appraiser who doesn't know an area very well and undervalues the property.
Right. So the appraisal process got regulated after the housing crash in 2008. And initially they passed what's called the Home Valuation Code of Conduct that then got superseded by some other stuff. But basically what it did is it set out specific guidelines for lenders and appraisers to help prevent mortgage fraud and prevent some of the things that led to the 2008 meltdown. So one of the tenets, a couple of the main tenets, one is the appraisal has to be ordered by us, the lender, right? A borrower cannot come in and bring their own appraiser. And then secondly, there's intentional layers between the loan officer, which is my function, and the appraiser, okay, to prevent coercion. So like what a lot of, especially the large lenders do, is they use what's called an AMC, appraisal management company. And those are national networks that have appraisers all over the nation. And they put in an order and it goes to an appraiser. And there's not a whole lot of control that that lender potentially can have with the AMC. And that's when you see these issues where you have an appraiser from Douglasville coming to do a property in Sandy Springs, right? And
fair.
Yeah. And the appraisal component is super important, obviously, for all parties. But once again, back to what I was saying earlier, when you have that local expertise, that is additional value for clients, right? So what we do is we have our appraisers. They aren't working for AMCs. They were vetted and hand selected by me and my business partner, but they are on a random rotation, right? So we are still compliant from a regulatory standpoint. There's no coercion, but we have certain appraisers set up for certain areas. So if your client's buying a home in Sandy Springs, you're going to get an appraiser that specializes in that area. And a lot of times live very close or actually live in that area. Like our appraisal partners lives up in Roswell and ends up getting a lot of the Roswell Alpharetta appraisals. And, he's lived in that area for, I think, 15, 16 years. So a lot of additional expertise on top of just being a great appraiser.
I love it. And I could do a whole one of these just on appraisals and issues I've seen and how having someone who's local and knows an area and neighborhood can change the value hundreds of thousands of dollars.
Right.
Lauren and I both had a situation. I brought the buyer, she had the seller. We had a property where this appraiser did not know the area at all, valued the home that had almost $400,000 worth of improvements in it as the same price as a tear down.
Mm.
So we value when our lenders have a great panel to choose from, and people obviously that are localized and work in these markets in which we work. So it's a huge leg up.
Right.
Yep.
And the other thing that a lot of people don't know, the AMCs, when the appraisers contract with the AMC, how they stay in business is they take a percentage of that appraisal fee, right? So where our appraisers are not working with AMCs, they're getting a larger, they're getting the entire amount from us, unless they're under like a local management company, like a local appraiser. But the bottom line is you get a much higher quality appraisal because the great appraisers are going to work independently as opposed to giving up a lot of their fees to be spoon-fed business from an appraisal management company. So
Yep.
you end up, the consumer doesn't pay anymore, but more money ends up in the appraiser's pocket. So you get a better appraiser on the job because all of us want to go where we can make the most money for what we do. Right. So the best appraisers, they don't work for AMCs, or if they do it in the background when they don't have any orders coming in from local lenders like us.
Yeah, it makes sense.
Got it.
Well, we appreciate it. And we know that your job has been wild this past over a year and a half. Can you believe this has all been going on for over a year?
Yeah, it's crazy.
It's wild. And we would just love, on an ending note, to hear your predictions in regard to what rates may look like by year's end, where they currently are, and what you anticipate seeing towards the end of 2021.
Yeah, that's a great question. So that's something that I could spend like 30 minutes talking about. I know we don't have that much time.
We've got 3.
Okay, we'll do it super compressed. The biggest thing for people to understand about rates is depending on the economic volatility, rates can be just as volatile, okay? So to kind of sum everything up, when we go back to pre-COVID and we first went into quarantine, the financial markets started crashing, and one of the things the Federal Reserve did to stabilize the markets is they started providing liquidity through buying treasury bills, which is their own debt, and buying mortgage-backed securities, so we would have money to lend, okay? What that also did is that pushed down rates to 50-year record lows. And when we look back at the data now, it looks like the lowest rates will have ever been was the first week of January. And as we come out of this, a lot of economists are referring this as the reinflation of the economy as the economy fully opens back up. And that's going to put pressure on mortgage rates to rise. Now, what's super fascinating about this, at least I think it's fascinating because I look at this stuff all day, is if you go back a couple months, a lot of economists were expecting rates to be about 1/4 to 3/8 higher than we are today. So what's been interesting is with this Delta variant being out there right now, right, and this could all change tomorrow depending on the data, but what it's done the past 2 months is pushed rates back down to closer to where they were fourth quarter, right? So we're seeing rates now sub 3 again without paying points, which is a totally different conversation. But basically about 3/8 in rate above the 50-year record low, where we were expecting them to be closer at this point, instead of south of 3%, 3 3/8 to 3.5.
Yeah.
So that's kind of, the wild card of what's going on economically. Rates are going to go up. They have to. The Federal Reserve has already started talking about paring back their purchase, which will cause rates to rise. And the other advantage, I tell people all the time, and it's important for your viewers to understand, is when rates move up, they move up super fast. And they'll usually jump and then stabilize and kind of plateau. But it's one of those things where when they start to move up, it happens so quick that unless you're like, we're literally about to push the lock button, by the time we get on the phone with someone, hey, this is what's going on with the markets, the rates have already moved, right? The good news for your clients is with rates at current levels through the end of the year, unless something dramatic changes, they're going to get somewhere between slightly above 50-year record lows and 30-year record low rates, right? But the bottom line is, over the long term, the next year to 2 years, time is not their friend. So that house that they're looking at today, if they want to wait this market out, which a lot of buyers are deciding to do, next year, there's a 99% chance that house is going to be more expensive, and the interest rate that they're going to be getting from us is going to be higher, anywhere from maybe a half point to 3/4 of a point, which is still, from a historical standpoint, an amazing rate. But they're going to end up paying more money for that house, and then their payment's going to be higher because the cost of funds has gone up. So, it's a great time to take advantage. If you can find the right house, the rates are smoking. They're absolutely ridiculous.
Smoking. I like
smoking. Yep.
Well, this has been really insightful, Damian. Thanks for your time, and hopefully really valuable information to our viewership. And we can't wait for our next series together.
Yeah, I'm always happy to help out. I love helping people. So anytime your clients have any questions, y'all have any questions, just let me know. I'd be happy to jump in there and do what I can.